I did a video previously on Gibraltar as a place to possibly go live, get residency, and get residency in particular where you don't have any physical presence requirement and you can have a capped tax rate as well as very favorable taxes on items such as pretty much any investment income. So if you haven't checked that out, go and check out the video. Today I'm going to talk to you a little bit about what about forming companies in Gibraltar, whether you live there or not. And this is a place that for a number of years I would use very commonly, especially for e-commerce companies. I'll explain a little bit of why e-commerce companies had or have some favorable treatment there, how some things have improved and how things are a little bit worse in terms of using Gibraltar, and therefore whether it is best for you and for your business. Before we do that, if you haven't already, please hit the subscribe button, hit the all notification bell. If you're interested in figuring out what is the best solution for you, you're interested in a customized, tailored solution, this is what I and our team at Offshore Capitalist do. We help to come up with custom global solutions for you in terms of residencies, in terms of tax optimization, in terms of asset protection, in terms of payment processing and banking and financial planning, etc. And so please reach out to us. You can book a call with me, calendly.com/Michael-Rosmer. There's a link in the description below, or you can send a message through offshorecitizen.net. Okay. So let's talk a little bit about Gibraltar. So on the surface, Gibraltar has a 12.5% corporate tax rate. They don't tax capital gains, so that's fairly appealing. They do have CFC rules. They do have management and control rules. And they used to have a 10% tax rate. But to be honest with you, typically when we were using Gibraltar companies, we would never actually pay the 10% tax rate. So how does that work? This is one of the more interesting places in this regard and was one of the most attractive places for e-commerce companies for quite a while, probably globally, but certainly in Europe. So just to give you some contrast, I used to kind of vehemently defend it as an alternative to Cyprus and Hong Kong. Cyprus, Hong Kong, and Malta all have some reasonable similarities. You can see, well, now Cyprus, 12.5% corporate tax rate, 12.5% corporate tax rate in Gibraltar. Certainly, okay, 8.25% to 16.5% in Hong Kong, but the offshore exemption is available. In Cyprus, you were able to have a non-resident company, and that was also true in Gibraltar. You could have a non-resident company. Whereas the other two had audited financial requirements. Gibraltar also has audited financial requirements on companies, but there's an exemption up to a certain threshold. And so that was attractive. Unlike Cyprus, Gibraltar has no VAT, so not part of the VAT regime. That was more attractive. And yet it was part of the European Economic Area and had access to EEA payment processing, which happens to be some of the lowest cost in the world. So you could get low-cost payment processing, not have to deal with VAT, not have to deal with tax, and potentially, depending on the size, not have to deal with annual audit requirements. So that was a pretty nice combination. It is a little bureaucratic setting up a company in Gibraltar. They'll tell you, it's cheaper than a bunch of other options and it's faster. This might be true in terms of the actual mechanics of it, but the due diligence is stronger there than in either of the other two places. And so you have to go through that first, which makes it slower and more expensive in a lot of cases. What ended up happening with Gibraltar that made it less attractive, and we started moving away from it quite a bit, was banks got more strict with Gibraltar. So they were more willing to open for Hong Kong companies, more willing to open for US LLCs, more willing to open for UK LLPs, more willing to open for Cyprus companies and Estonian companies and things like this. And as a result, that became less attractive because if you have banking, if you don't have banking, you have nothing. And it has since gotten a little bit better. There are more banks now who are willing to work with Gibraltar companies. And so I think that opens it up as somewhat of a reasonable possibility. As I've said, you have a situation where the corporate tax rate has risen from 10 to 12.5%, so a little less attractive in that regard. However, still no tax on capital gains. CFC rules, okay, not typically that relevant to you unless you're using it as some sort of a particular holding company. But the interesting thing is it remains one of the very few places in the world where you could have a local registered company that is not resident. So this was the famous thing that Apple used to have in Ireland. It's been gone now for a number of years, but they would have an Irish registered company that was not tax resident there. They would manage and control it from the US and tell the US, well, it's not a US tax resident company because they didn't have management control rules in the US, and it's not an Irish tax resident company because it's not managed and controlled there. Similar idea for Gibraltar. You could do the same thing. And Cyprus has been the other one that had the same thing. Cyprus just closed this at the end of last year. Now you have to formally state that you're a tax resident somewhere, and so this creates some greater complications. The kind of is trying to force you into their 12.5% regime, which becomes less competitive when now you can compare it to Bulgaria, now you can compare it to Hungary, now you can compare it to potentially Estonia, Romania, maybe Malta. So it's no longer as attractive as it used to be. In the case of Gibraltar, you're in a situation where you have an added benefit, which is this quasi-territorial remittance-based taxation. And so potentially, you could end up not having tax on the income of the company, a large portion of it, or maybe all of it, depending on kind of the details of your country, or your business operation, rather. And so that's pretty appealing. It's not got a good network of tax treaties at all. In a couple of cases, there are certain treaties that it is covered under the UK, because it is a part of the UK as a crown dependency. And so that's beneficial. But certainly, Cyprus has, for example, a better network of tax treaties, depending on where you're looking at. Hong Kong may have a better network of tax treaties. Some other places may have a better network of tax treaties. It's all case by case, depending on the type of income you're receiving and which countries you're dealing with. But this is definitely a drawback for Gibraltar. As I said, it isn't the easiest place for banking. There is more banking options available now for it than there has been in the past, and so that opens up some alternatives, and it does have access to EU payment processing. The payment processing thing is somewhat of a big deal because you're in a situation where the rates for payment processing vary based on the region that you're in. So, for example, Hong Kong has higher rates than the US, and the US typically has higher rates than the EU. This is basically a function of the fact that the EU has sued Visa and MasterCard repeatedly into lowering what is called interchange, which is the base rate that gets charged, and so then everybody marks that up in interchange plus of some form or another. And so as a result, hey, if you can save money, that's really good. And again, kind of stepping outside of the VAT regime is a little bit helpful. Now, in practice, I noticed that what has changed a lot in e-commerce is people are primarily tied in to something like Shopify today. I don't see a lot anymore of WooCommerce or custom solutions, etc. And so you are more limited in the payment gateways that are available to you in your business. And therefore that could play a role in whether it's a good fit with Gibraltar or not. Gibraltar also has had some specific rules that were favorable to certain types of industries. For example, they appealed to the online gaming space for quite a period of time. And so there are some advantages for certain types of industries kind of the opposite. So you, again, have to sort of play out what it is that you think would be more useful for you. Overall, I think it's a reasonable place to have a company in some situations. It's one that tends to fly under the radar. I definitely do not use it that often anymore. We used to use it a lot. And yeah, it's just not, there's a reasonable number of cases where I would say the majority of cases, it's not the best fit. But that being said, every situation is unique, and so I always tell everybody there is no one size fits all. Do not go with what your friend got. That's probably a bad idea. A, they may have messed up, and B, your situation is different than theirs. So you have to evaluate case by case. So anyway, if you're interested, please reach out to us. We're happy to discuss with you and see if there's a fit, something interesting for you with respect to Gibraltar or any other country. We can do an assessment on your business, figure out, okay, what is it that is going to be most useful for you, will save you the most money, will optimize your tax legally as far as possible, including banking, including asset protection, including all these other different factors that might be relevant, and then help you put it in place if that is something you would like help with. So I will look forward to seeing you guys on the next video.